Sup traders, how y'all doing? In this video, this ride along, we're going to talk about trading the crypto market from a high time frame and behavior patterns, psychology, knowing yourself, preference of how to move and act, and aligning all these things. So welcome in, fam. Much love. Trav here. I hope you're doing wonderful. I hope you're doing excellent. I'm on my way into town. Pick up a lady friend, go for a hike. No dog with me. I left the dog because she got injured on a hike Friday. I believe she sprained her ankle. I'm praying that's what it is. It doesn't seem like it's not a torn cruciate ligament. It's not a torn Achilles. She is walking on it. Hope it's not something bad. But she's chilling at home. Please pray for her. And on this ride along, and I like the ride alongs. The ride alongs get a lot of views, and I think it's just actually kind of fun to take someone somewhere and show you something rather than just sitting somewhere. So check this out. This is what we got in Hawaii. We got people in the back of trucks. It's legal on the highway, so you've got to be careful when you're driving. But we're coming down. This is Miley Point. This is a surf spot. I haven't surfed here this summer. It's not my favorite surf spot. Looks like it is flat today anyways, so nobody out there. It's really reefy, but it gets huge. I've had some dangerous experience out there, and that's one of the reasons I don't go there. So yeah, let's talk about the cryptocurrency market and how to trade it and certain behaviors and so on. So I just cut some shorts. One of them I cut over the win, one I cut a break even. I was shorting failures at all-time highs of a couple coins, a cat coin and a random proof of work coin. And I just realized, like, this did work for me 3 weeks ago, but the market's different right now. The difference back then was the whole market was showing signs of topping. And now the market's showing signs of possible reversal to the upside. So my odds are going to be way better if I get everything aligned. Yeah, I'm going to have a lot of insights in this video on trading, so make sure to stick around. It might actually be a long one. I've got about 15-minute drive ahead of me. I don't know that I'm going to record this video the whole way, but there's a lot of things I'm going to talk about. But the first idea is that, okay, I had this idea. Okay, I have a trading system, and the trading system, it works really well, okay? However, it's slow and I'm impatient. Okay? In theory, I can touch grass with what I want to trade, right? If it's a bear market, the system gets us out of the market, but I want to make money, right? So, what do we do? Well, my idea is, okay, I'm going to trade my system, which is long only, and then I'm going to short altcoins as they rotate, play whack-a-mole. I'm fundamentally bearish on alts. That hasn't changed because it's the easiest thing in the world to produce more of. It's incredibly hard to predict which ones are going to pump, but it's very easy to predict that most of them are going to go back to zero. Why? Because we have a history of it and it makes sense, right? XRP, $3.30, $1.30, 70 cents, 40 cents. Just that's going to trigger some of you guys because y'all are bag holding XRP, but these things, it's easier to predict that an alt is going to go down than it's going to go up. Right now, Doge gave a long signal, but it didn't move. Why? Because now people want to buy, insiders or people in the crypto community want to buy a dog coin. They buy a dog with hat. They don't buy Doge. Before, it was sheep stole from Doge, and now Whiffs and Bonk and Flocky steal from Doge and sheep. So, yeah, what I've realized is, okay, so we'll go to behaviors. So I have a certain set of behaviors that are learned and are also natural to me. And you may have different behaviors, and what's natural to you might be different, and that's going to affect your trading style. So for me, it's natural to not take profit but add to a position and let it run as long as possible. I don't like to hold a trade underwater. I don't need to realize a profit. I like to let my profits run, and I like to advance my stop and just kind of wait, right? And that can make that all the data shows that does amazingly well, but it only does amazingly well in certain market environments. In certain market environments, right? If the market is just chopping up and down, or say it's the Forex market, which is the worst for trend following, which I'm describing. Every time it advances in my favor, I never take a profit, I just keep adding to the position. Oh man, I have such a low win rate and so many losses because the price keeps coming back around. And also, since I don't like to hold underwater, so many trades are just quick loss because it goes against me, I cut it, goes against me, I cut it, which is fine. It's fine. Like, I have a lot of $100 losses and then $10,000 wins, right? It's $100, right? Where my risk was 1,000, but I like to cut at 100. So I know these things about me. So the problem with taking a signal on a coin that the market is not signaling the same way is, a lot of the time those are those signals where you get a reaction and it goes 1R in your favor, or maybe even 2R in your favor, and then just turns around and comes right back to your entry, and you're like, now what? And then it goes to your stop, and you're like, why didn't that work? Well, it didn't work because the market, the broader market, wasn't agreeing, right? So, a couple ideas here. First is, I've studied so much and watched so much chart, I can kind of tell when something's about to pump or dump. Not all the time. It's not like, a lot of the time it's like, all right, it's consolidating, nothing's going to happen. But sometimes I'm like, price is about to launch right now. A price is about to dump right now. I can just tell, but it doesn't mean that I should trade it, because if I enter and I'm right, price pumps in my favor, but is it going to be an extended trend that goes for weeks and days? I don't have the habit and don't want to drill the habits of take that quick scalp and I'm out, right? I don't. What happens is I take those trades and it goes in my favor initially and I add to it. And then it goes a little more in my favor and I add to it, and then it quickly reverses. So one thing I'm saying is, knowing the direction of the market next on the low time frame, even if you can accurately say, hey, price is about to move in a direction, it's not enough to make money in the market, because even if you drill that behavior, now suddenly when the market really trends, you don't have the right behaviors, and it's really hard to change behaviors. I mean, we can talk about addiction, say like, oh, some of the times I'm going to trade this way, some of the times I'm going to trade totally different. It's really, really hard to do that, because we're talking about drilled behaviors. So the market moving is one. It's important. Now, I do believe that trend following in most cases makes the most money. The evidence is Richard Dennis, who turned $400 into $200 million. He doubled it 20 times in 20 years. Is insane. And then he went and taught the turtle traders a simple trend following system: 30-day breakouts, 55-day breakouts, trailing stop, pyramid positions, no TP, exit at a 15-day low, and they all did 20 of them. 20 of them were averaging 100% a year immediately with no trading experience. Why? Great system. Trend following is a great system. It's hard to do trend following. Okay, well, I'm talking about reversals as a form of trend following. Reversal into a trend. Reversal into a downtrend. So when things top and they dump, right? So if the market doesn't agree, we'll talk about agreement of the market, so and what that means, confluence. maybe an altcoin tops and you can short it, but man, it's such a choppy ride down. It has 2 red days, then a big green day, and then 2 red days, then a big green day, and it's like, I need to run my stops so wide, I make some money. Yeah, I make some money. The risk reward isn't great, and it was stressful and took a long time. Whereas when the market tops together, what we saw a couple weeks back, or in early mid-June, man, almost everything had like 10 straight red days. It was really easy. It didn't matter what you shorted, right? I sold something that was giving a short signal, but everything dumped regardless of what they were signaling. Why? Because the market itself signaled the top, right? So it's like, I'm not really a stock trader, but if you're trading stocks, you probably want to pay attention to the stock market index, right? Something, yeah, you know what's really interesting? They have an advanced decline line. Some of you guys know what that is. Advanced decline line. It just tells you basically the ratio of stocks making new highs to new lows. And in a healthy market, you want a lot of breadth, which is lots of stocks are making new highs, not just 1 or 2. And that would be a really interesting tool to have in crypto, as a market breadth, which is advanced decline line, which to my knowledge isn't a thing. That'd be a really cool indicator. But you're trading the indices, or you're trading stocks, you want to know basic things. The index, is it over the 200 moving average, or is it under the 200 moving average? Right? Are a lot of stocks failing? And you see it on the index, right? You have to pay attention to the broader market. So, a way to do that in crypto is you look at the total market cap, you look at the total 3 market cap, excluding Bitcoin and ETH, you look at the others market cap, which includes the top 10, and you look at, you can look at Bitcoin dominance, Ethereum dominance, and others dominance. And the idea here is, so let's give a basic signal. A basic reversal signal long to the upside is price taking out an old 30-day low or monthly low and then closing back above it, right? That'll be a failed breakdown. And a failed breakout would also be a basic signal. A price goes and takes an all-time high, or takes an old monthly high, 30-day high, 55-day high, and instead of breaking above it, fails right there and starts to dump. Okay, those are basic signals. Another basic signal is price hits that old high, 30-day calendar high, closes above it. That's a breakout, right? So what I'm saying is, if you look at the total 3 chart, or you look at the total crypto chart, you can find breakouts on the total crypto chart. You can find dip buy long reversal on the total crypto chart. You can find failure at the highs on the total crypto chart. But if you're not seeing those things, the odds of an individual altcoin chart playing out is much lower. So what's just happened is, the trades that I cut today, I'm like, these are showing all-time high failures, but the others chart is showing a dip buying long opportunity, right? So why? So the shorts are being stubborn, and I can scalp the shorts on a reaction, but that's not the behavior that I want to drill and train, right? Another example is if alts are breaking out, but the total crypto market isn't maybe gave a short signal, maybe it's failing at the high, the odds of those breakouts working super low, right? Even if on the chart it's like this is a breakout, right? Well, what is the market itself doing? So what I'm suggesting for me and for you, this is for me, my trading plan is, outside of my basic system, if I want to trade, if I want to short alts, there needs to be a short signal on the total or the others, across the whole market. There needs to be a short signal, because those are the times that I'm going to be able to add and get a huge winner. It's not going to happen that often, but that's good because I don't want to trade every day. Another thing about me is I like to stare at the chart if I'm in a trade. If I'm not, I can breathe, I can relax. So yeah. Quick note, those of you guys who are 15 minutes into this, if you're detail oriented, I'm about to share a detail with you that is super valuable and important. So I don't think Richard Dennis's exact system works quite like it used to, and one reason is it's publicized and copied so much. So there's a lot of more false breakouts at 30-day and 55-day highs. So what I found in my computer modeling is this is one of the reasons why it's better to wait for a close. You wait for the daily to close above for a breakout or under for a failed breakout. Where the old trend following systems didn't wait for a close, they just immediately bought it, right? And if they bought it and it reverses, now their stop loss is under pressure, and that's when you can sell and counter trade them, right? So that's one thing my computer modeling revealed. Another thing that my computer modeling revealed was that how old should that high be that works as a breakout or a failed breakout. It varies, but typically 15 to 90 days. You don't want, if we just take yesterday's high, that's not a long signal, right? If we take yesterday's low and keep going, that's not a breakdown, right? It needs to be at least 15 days old, if not 30 days. But if it's, say, we're in July and it's June's low and it's 15 days old, that's fine. You do that. Now, you also don't want a level that's too old, because if we're trying to fish for a dip and we're coming down and we're taking a low from 20 years ago, yeah, we're in a severe downtrend. Just leave it alone, right? We want to, for a dip buy on a strong asset, we want to just be buying when, yeah, we're revisiting last month's low and we're closing above it, or 2 months ago. So 15 to 90 days. This is what we have. That's part of the indicator of the system. Yo, look ahead. You're probably just listening, but yo, check out the middle of water. This is a absolutely beautiful island. I love this place. So lucky to be here. So, yes, I hope you find that useful. I hope you find that interesting. Comment down below. Let me know what y'all think. And you probably apply a lot of this to stocks as well. It's important. Yeah, I mean, Darvas found that out as well. A lot of you guys have heard me talk about Nicholas Darvas. He was a professional dancer who turned 30,000 into 2 million in the 60s trading stocks over Telegraph, whatever, from Southeast Asia. All his information was late. He found it was important to pay attention to the index. It wasn't a crystal ball, but it was important. Okay? Appreciate you. Much love. Look forward to hearing what you have to say in the comments. Peace.